Good day, fellow investors. As promised, in this video I want to discuss Intel as a stock to buy, but also explain my research platform because it will give you a lot of context around what Intel is, what's the risk and reward, why I consider it a buy now, but also whether there are better buys or not. So let me start by explaining my research platform. That will give you a lot of context. As you probably know, I'm a researcher, stock market researcher by profession, and I share my knowledge a little bit on YouTube, but here you can find the course, what I do, and in this example I want to discuss Intel to really explain how this works, so you get value for Intel analysis, and maybe some of you will get value also from discussing what I really do. You can read more here. There is a 28-day money-back guarantee, so you just send me an email and I refund you with a click if you're not satisfied, if you don't think it will give you value. So feel free to test it out. And this is in practice the platform. So covered stocks, there are about 30 stocks that I cover in detail, and from those I select the best ones that you can find all on my Excel. Here I covered a lot of things, but there is the top risk and reward opportunities. Currently we have 10. One of them is Intel, and then you have the risk and reward, an explanation of possible returns. Intel is not the best, it's medium risk, medium reward. There is low risk and medium and high reward, so these guys are a little bit better. Okay, medium risk, higher reward, so that is, again, how I explain things. And Intel is a good buy, and that's what I want to explain. And there are other 20 covered stocks plus another 100 that I follow depending on where the cycle is. For example, now copper stocks are expensive. When those will be again in the cycle cheap, then I'll again look at all the sector and cover in depth 3 or 4 stocks, and then you will see, okay, now this is for me, this isn't for me. And in that line I'm also following Intel, and I want to explain things here so you will also get a glimpse on what I do, and you might want to check it out on my research platform. Let's dig deeper into Intel. So of course Intel boomed in the 1990s, then a long period of unhappy shareholders, one boom, and then over the past 4 years really bad competition taking away market share. But the price-earnings ratio is really low. There is a dividend. They are making a lot of cash flows. And I made this video 2 years ago, but Intel has completely transformed since I've made this video. And that is because 2 years ago, the company was focused on using the cash flows to do buybacks, to reward shareholders, and to slowly and steadily compound, let's say, the share value over time. Then that didn't really work, as we have seen with the stock price here, and they have hired a new CEO that's focused completely on growth, so a lot of investments, and that takes time to get reflected because the market always takes a show me stance, which might create a great buying opportunity. Now it's a good buying opportunity, might create a great buying opportunity down the road. And the key is also the core of my platform, so that you see how each of these top 10 ideas fits your portfolio. What kind of risks can you take in relation to the reward? Will it lead you to your financial goals? So if we go to the curriculum, we start with Intel. So this is each stock that I cover has a 2-page investing summary, and you can simply focus on the 2-page summary, understand the risk and reward, and then see how it fits you. And then of course there is also the Svenkalin portfolio as disclosure on what I own. Whenever I change something, trade something, I disclose that to be transparent. It is not something to be followed because I'm not a financial advisor, I'm just a researcher. So I discourage people from following. That's why I'm trying to explain the risk and reward of what I'm doing, see how it fits you. So I have to also disclose what I own, and that's also what I do. So it is there for disclosure reasons. Please don't copy, because we are all different and my life is different than your life. So it's not really healthy to copy. The key of the platform is that you understand the risk and reward of an investment and then see how it fits you. And to do that, you read, I make the summaries, I listen to the conference calls, I update on earnings, I understand the financials, and therefore I hope to give value there. So Intel, they expect a drop in margins, remaining flat for a few years. The growth should come only from 2025, 2026, which is again a risk. If the growth comes only in 2027, then it will be ugly, even uglier for the stock price. So if that happens, it could be really ugly for the stock if the promises are not met in time, and Intel has been wrong on those timings very often in the past. So gross margins will decline and then increase, but that is long term for the market, 2-3 years. Low revenue growth for now and then acceleration as the investments they make bear fruit. So from an investing perspective, I would say Intel is relatively cheap compared to others in the 40s, where we are now, cheap in the 30s, and really incredibly cheap in the 20s related to the stock price. And then you would say, oh, Intel will never crash to the 20s. Well, that's why I cover stocks, and here or there, some of them crash to incredible levels, which makes them an incredible buy. And then again, the risks, where it comes, the competition, execution, cyclicality of the sector, and that's something you have to then price in and then see how it fits your risk and reward. And then of course for every stock that I cover there is the valuation table. So here you just click on it and there we go for Intel. 0 free cash flows for a few years, and then dividends, buybacks, and growth for the free cash flows. If the valuation is there, now Intel is priced for a 10-11% expected return, which makes it a relatively good buy. Of course, if the growth rate is good and then down the road still there and the market is happy, then Intel is really cheap. This is the potential. So the current market cap is 200. If it goes to 800 in 10 years, that's a great return, and that is definitely a possibility. But also if things go bad, if the growth isn't there, then things can get ugly, and there is always downside. But also on the downside, will Intel go bust with 20-30 billion of operating cash flows, just 30 billion of debt? Then also keep in mind Intel has invested a lot of money over the last years and will invest a lot of money. So they will invest 200 billion over the current decade. That is the market cap. So will that be value for others? Will that provide a margin of safety? I would say 200, but 150 very likely, and that's why you also see Seth Klarman owning Intel as a buy now. And then conclusion, from a risk-reward perspective, it's likely that Intel will deliver a double-digit investing return over time. Range of returns is between 0, of course, in 5 to 10 years. 0 not that likely, but possibly also 20 years, and that's something I follow. These are, don't do this for all stocks, but just an explanation of, okay, what can happen to Intel stock. Best case scenario, we see it go to 300, which is 6x even, or let's say it just doubles 2.5 times higher, and that is Intel. And then if you scroll down, then you have the last Intel investor meeting, my updates, what they are doing, how it works. I'll put this on free preview so you can read more if you are interested in Intel. The past analysis, the refurbished analysis for this year, past conclusions, etc. etc. A bit about the sector to better understand the risks. So it all, of course, depends on price, and that's something you have to see how it fits you. And that's what I do. I follow something. I hope to find it at a low risk level with a medium to high return, which is value investing. And there are the companies that are on the top 10 are let's say, value investments, and therefore if you're interested you can check what I do. Platform is for the people that are looking to add value investments to their portfolio, that want to know and invest in stocks but don't have the time to do the research, follow earnings, update on risks and accounting, etc. That investors that expect returns above average, which also includes less risk, so the balance there, value investing, this is the market, let's say market efficient market, fairly priced, and we try to find less risk for higher rewards. And if we can find that, then over the long term we'll do really great. And that is also a different opinion than the mainstream, so that's also there on the platform. I have added a quarterly market overview, so that discusses, in this case, S&P 500, China, commodities, Russia, and then depending on the topics I'll try to update it every few months. And then also looking to learn more about value investing in a practical way. So you can check the research platform. If you're not satisfied, there is a refund policy. Within 28 days, send me an email, also if you have questions, and I just click and refund your money, so feel free to check it out. This is what I do. Give yourself 2 weeks to understand the email, the updates, to read a little bit. The 2-page summaries for each covered stocks are there. I will be adding them as I'm waiting for earnings. Some come later, so the list will get longer and longer, but the 2-page summaries should really do well from that perspective. Well, thank you for watching. I'll see you in the next video and perhaps on the research platform.